So good afternoon, everyone, and welcome to this last panel, which is an investor panel. I'm very grateful for all of you being here. Also, hi to the people in the lounge over there. It's so great to see so many people here, and thanks again to our sponsors and co-investors for this wonderful day. It's great. It's my first panel in 3 years that is not virtual. There's nothing I hated more than being on a Zoom panel. So luckily we're done with that. Those 3 years are over, but actually during those 3 years it was a busy time. Investments in ag and food tech kept on growing, billions and billions flowing into this sector. Also at GreenSoil, we kept on being busy. We started our 4th fund. We have now around $200 million under management in different climate tech verticals. During COVID, we made another 6 new investments. And next year, we're kicking off a new Israeli-based climate tech fund. But then, coming out of this COVID area, we didn't have much time to rest and enjoy the healthy times again, because then a war erupted. Probably what seems to be a global recession started. And we're seeing this year investments probably going a little bit down. So in this challenging environment, we want to hear from these investors what they believe is going to happen in the next coming years and how they see the challenging area we're currently in. So with me here, I have a wonderful panel, and thanks again all for joining us. Bill Sonneborn from the World Bank, Ofer Yehuda from Shibolet, Danny O'Brien from SVG Ventures, Louisa Burwood from AgFunder, and Matteo Parenti from Blue Horizon. So we'll kick off with a 20-second introduction, each of you, your name, what you're investing in or related to investments, and especially what you're interested in. Bill, you want to start?
Sure. Good afternoon, everyone. I'm Bill Sonneborn, the Global Director for Disruptive Technology and Funds at the International Finance Corporation, part of the World Bank Group. I joined here 3 years ago after 30 years in the private sector, with a focus now on investing in the private sector and tech to really create shared prosperity and global poverty. So we focus on 120 poorest countries on the planet, including Ukraine.
Hi, my name is Ofer Yehuda. I'm heading the high-tech practice group at Shibolet. It's above 100 people with a specific passion to the Agtech food tech world. I personally had the specific practice over there with over 60 startup, 4 funds, and lots of incubators, including Trendlines, who are hosting us here, and looking forward to participate in this panel.
Good afternoon, everyone. My name is Danny O'Brien. I'm the Managing Director of EMEA and Global Programs at SVG Ventures Thrive. We're a global agri-food investor, farm to fork, early stage, seed to Series A mostly. We have an accelerated program in Silicon Valley, one in Canada now too, and in Australia. And we also work with a lot of leading corporates in the sector, like ICL here in Israel. And it's a pleasure to be back here for my 2nd time this year. So looking forward to the panel today.
Hi everyone, I'm Louisa Burwood-Taylor. I'm Head of Media and Research for AgFunder. We're one of the most active food tech, Agtech VCs, and we have just around $200 million in AUM. I'm a bit of an imposter on this panel because I'm not actually on the investment team. I head our media and research team, which is our news site and our research reports.
And you have all the data.
And I have all the data.
Hi, my name is Matteo. I'm supposed to be on this panel, I think. We're an impact investor. We invest in a sustainable food system. That means we are investing in agtech and food tech companies across the value chain. So from all the way upstream, from gene editing all the way down to packaging and everything that's in between. We have more than 70 companies, more than 70 investments. And yeah, we do early stage, so seed tickets, and we do later stage growth tickets. And it's great to be here, and thank you very much for the invitation.
Great. So what we're going to do here, we're going to have a little bit of fun, as always. We're going to talk about 4 different subjects. And I'm going to kick off every subject with a statement, and then either you vote yes or no. But I thought about something else in the last 10 seconds, which is that I'm asking the audience to vote with us. So I'll say a statement, and if you agree with the statement, please raise your hand. And the first statement is about the climate, the current climate, and the relation to AgTech. And the statement is as follows. In the current financial climate, investors won't have a big appetite to invest in AgTech. Raising money in 2023 will be very challenging, and we will see at least a 20% decrease in funds being raised. All those that agree with the statement, please raise your hand.
I think you rolled three things into one there. So the first statement,
basically what I'm saying is it's going to be miserable. Yes or no?
Okay. No, I still think that. I think, well, in some ways. So I think the numbers, the data, and the investment trends, we're going to see a pullback in funding. But that's for various reasons, which is not necessarily there's fewer deals closing. Valuations are coming down, so deals are going to be smaller for this past year. But I think the macro environment actually is throwing AgTech into the spotlight, and it's going to become a more attractive category for generalist investors given the urgency of the social and climate crises at the moment.
So before you agree, great. So we're optimists. What are we seeing in the numbers in 2022 so far?
Yeah, so I can't share any exact numbers yet because I won't want to mislead anyone. So you all have to sign up for AgFunder News to get the report when it's out in February. But overall, the general trend is down. I mean, a lot of that is more downstream technologies, closer to the consumer. I think we're definitely having smaller deals in alternative proteins, which we heard about before. But we did a report on Asia Pacific recently, and we looked at the first half of this year, and farm technology is performing quite well. And I think, again, for some of those reasons I just mentioned.
Good. Bill, you said you agreed?
I absolutely agree, because the crisis we're in now is only going to get worse. Just 2 weeks ago, I met with the largest owner of farmland in Ukraine in Washington, D.C. He can't get access to finance to buy inputs. Forget the war. He can't even fund inputs. So his winter wheat crop is going to be about 1/10 the size this year than it was last year. When I think of what that's going to do to food prices, it's going to incentivize a lot of investment into AgTech.
So how will that impact the investments?
I think a lot of generalist investors are going to go where they see an opportunity, which is this massive arbitrage of really high food prices and the ability to take advantage of technology to solve that problem. And so, generalists will become specialists pretty quickly.
Got it. Matteo, how do you think all of this will impact the valuations?
So I think the first statement I would make here is that last year wasn't the benchmark. I think that's important for everyone to, when they think about down rounds, etc. It's probably just more reasonable what's going to happen next year. I feel like a lot of companies will struggle. I think there was a lot of companies who extended their runway this year because that's what investors like us and everyone else in the industry told them to do, extend runway and save money, which just means that everyone is delaying everything by 6 months, 12 months until they need to raise again. So I think next year will be a difficult year for sure. I'm optimistic just because I think there are great assets out there and there's still money out there. So the good assets will still get their funding right. I think they might even be able to keep valuations. Just because more money is chasing fewer deals, good deals. But I think it's, people talk about bloodbaths, etc. I think it's just going to be a reasonable year where investors have proper conversations again.
Sometimes a bloodbath for startups is a reasonable year for investors. Danny, does that climate mean that we're all going to save our money for our own portfolio companies and not invest in new things, or am I over-exaggerating again?
I think you're over-exaggerating again. I think there's always a market for new deals, as investors, you always got to be looking to the next thing, obviously supporting what you have. And I think you probably see a lot of investors distracted with their own portfolios the last 6 months to understand who has runway until what time, and making sure the kids are okay first before looking at new deals out there. But I think I'd agree with Matteo that in general it's an optimistic time. That the problems in agriculture are vast. And in many cases they're getting worse, and the war is shining a light on that. So I think there's always new opportunities, and I think there's lots of reasons to be optimistic.
And Ofer, let me refer to what was said here, because I do agree that since the sector is defensive by its nature, and I won't anticipate that we see a great decrease. Currently, what you see, at least in Israel ecosystem, is that there is a huge decrease in the number of rounds in the AgTech, food tech sector, including, again, maybe it's just a symbol, but term sheets that are being, drawn down after providing them to the companies. And currently, I do see the current VCs, mostly local, do concentrate on keeping their portfolio in a good shape. Maybe that, hopefully, that will be changed in the next few months, but currently there is a sense of distress it's at least at the early stage startup in which I'm participating in.
And sorry, one sec, Bill, because Ofer, you are talking about what's happening in Israel, and of course we're talking about global issues. I'm not going to make any political statements, but the elections last week, political, maybe some instability, more stability, any impact on specifically in the Israeli AgTech sector?
That's a big issue. I'm not sure that I'm in a status to analyze that, but
You're simply the only Israeli on the panel.
yeah, I know. I wasn't ready for such a complex question. I personally, at this point, I do not think. I think the sector is strong. We see, again, if you don't isolate the last few months, you see a great increase, great maturity, of which very much remind me of what was the medical device world, if you take it in Israel a few years ago. So while there are still lots of gaps regarding the founders, their maturity, and etc., I don't think that will be a factor that will impact massively on the industry.
Bill,
I was just going to jump in. I want to share that I do have some inside information on this topic. So the IFC board, including the Israeli representative on our board, just recently approved a $6 billion platform to invest in food security over the next 3 years, $2 billion a year. Now, not all of that's going to go into AgTech. Some of that's going to go into agribusiness and more traditional sectors of the food economy.
and how much of that is coming to Israel?
Well, that's one of the reasons I'm here.
Okay, let's go to the next subject. I want to talk about AgTech, sustainability, and impact. And I think when we started this wave like 10 years ago, it was all about food security, and then we got the wave of healthy food, and now we are in a wave of sustainability and impact. So again, I'm going to kick off with a statement, and in the audience, you're all invited to vote with us. And the statement is as follows. When talking about sustainability and impact, most AgTech startups are merely greenwashing and don't have a clue what actual impact they are making. They don't know how to measure it, and they don't know how to report on it. All those in favor, please vote. Okay, I would say 37.8% agrees. Danny, how important is impact as a theme for investors in AgTech in your fund?
It's really, really important for us. We look for companies who obviously have great products, great team, etc. But the impact angle needs to be strong as well. And we actually just had a global impact challenge to find the best startups in a number of themes in this space. And we had 450 applications. We launched it here in Israel a few months ago, actually. And looking at through those applications, you see a lot of good companies first who are trying to position it as an impact play when it's not really. It's kind of the last slide. Oh yeah, and by the way, we reduce emissions by X%. So I think you really got to look for those companies who are passionate about it, have it built into their business model, and are doing it for the right reasons as well. But to be impactful, it needs to be scalable and profitable for the end users as well. I think there's sometimes too much of a focus on saving the world and kind of having these technologies, but it needs to be profitable as well for the end users.
Matteo, your fund's doing a lot in impact, as you said yourself. How are you measuring the impact from your startups?
Yeah, and I think the first statement was interesting because I don't think that it's a startup's problem to greenwash. I think it's more the funds and and the asset managers. The way we see it with with impact, we really measure it in two different ways, or we split it up. We split it up between impact and ESG. Impact being what the company does, and I think there we're lucky enough to all be investing in a space that is inherently impactful. The question is, how do you measure it, which I'll get in a second. And the other thing is, the other side is ESG, right? And ESG is how you do it. And I think that is more of a tick in the box, and there's where greenwashing can happen, just because you tick the wrong boxes or you don't have, the right policies in place. But I think on the impact side, there's no golden formula. And I've been talking to a lot of investors here, and I always ask a question: how do you measure impact? Because I think everyone, and we us included, we say we want to be the gold standard of how you do it. And I think everyone wants to do it, but I think the nice thing is everyone is quite cooperative, so everyone actually is quite open about how they measure it. we have started, our goal is to actually have an impact quality return. What that means is like every investor, we look at money multiples, but we also want to have impact out over money invested. So what we will try to do is quantify what the impact is. There's obviously easy ways of doing that, right? CO2 emissions, etc. You can put a dollar value on that. There's more difficult stuff. What's life of a chicken? How do you measure that? Biodiversity, how do you measure that? That's something I don't think I would claim that I have a solution today, or we have a solution today. But we have to get that there gradually. But I think monetize or putting a value on it is going to be the key, not just having a tick in the box or qualitative assessment.
Louisa, going back to the data a little bit, any insights on how much sustainability is becoming important in the overall AgTech sector?
On the data side, we've just started doing a bit of climate tech reporting. We did an addendum with InvestNL in our Europe report and pulled out which investments could be called a climate tech investment. It was mostly around sort of innovative foods, or alternative proteins, indoor agriculture, some farm software. And as you said, it is innately impactful, this industry. There was definitely underweight. I mean, it was definitely the minority of investments were climate tech investments in Europe. I would say one of the things I find a little bit frustrating is seeing startups pivot themselves into being an impact kind of play. And an obvious example is carbon. We've seen a lot of MRV and drone kind of companies start to transition from providing crop health monitoring to providing carbon measurements. And it's all very much estimates. And I do think there's a lot of greenwashing going on there. We need to be very careful, because when I look at the articles that I read on our website, carbon is number one. And it was Regen Ag before that. And there's a lot of excitement. You've got generalist investors, you've got big tech coming in, but the science is still very loose.
Ofer, as a leading legal expert in the space, what are you seeing in the legal framework around sustainability, impact, and measurement of impact? Do you see more and more in the SPAs, in the investment agreements?
Yeah. So I think we are at the beginning or at the middle of the area in which that it's going to be regulated and not just all kind of voluntarily mechanism to measure that. You do see almost in every transaction, and even in the early stages, representation, due diligence questionnaires that are coming basically from the big law firms digging into that. It's still a bit of artificial, I must say, and the answers that you do provide always go as they are. But again, maybe to do a bit of an advertisement, we understood that like 2 years ago, and we have established a unique independent company held by Shibolet that is doing the ESG reports for the company. And I must say that you see, not just in the public sector, in which you see more and more due to the regulation, you see early stages company, and most likely the A round and B round, that are doing the reports, are getting interested in moving ahead. Still a lot to be done. It seems to be, again, on the surface currently, but I do think that the trend is that this is here to stay, so no question about it.
The only thing I would add to that, for startups, do little, but make sure you do it the right way. And if you say your impact, show how your impact. That's more important than big sentences and use huge messages. Let's go to the next subject, which is around exits. I mean, we've all been here around for 10 years. Great excitement about the investments. So far, not a lot of exits. And here's the next statement again. Feel free to vote together with us. Creating some exciting exits is becoming an urgent need. Without exits, AgTech won't become a legitimate asset class and the excitement will disappear. Whoa, 3 people agreeing with me, and one of them is from my team, so she doesn't count because she wants a bonus. By the way, I didn't say that I agree with the statements. Bill, is there a problem with exits, or it will come, and as long as we do great things, look, exits are less of a problem?
I think exits are always important, because having actual, full cash-on-cash returns create more excitement for more investment. So without exits, you don't necessarily get that natural kind of circular flywheel of more capital coming into the sector. So the nice thing about AgTech is there are some large conglomerates that at least could provide secondary purchases of some of these technology businesses. But many of the founders have the dream of being publicly traded, and it's a tough asset class to get that large and scale that big.
So you believe mostly in M&As, secondaries too?
I think in the space it's more likely, but there are some, Farmers Business Network in the U.S. that's preparing for an IPO. There are some examples.
Danny, do you agree, or is there an IPO window? Will there be an IPO window?
I think you've got to wait for another year at least to see what happens. I think, reasons to be optimistic. I think over the last 2 years there's been a lot more unicorns in the space. FBN being a great example, Plenty, Infarm, many others. And I think if the IPO window was open right now, you would have seen some of them go public via SPAC or direct listing or whatever. But it's just the environment isn't there right now, right? So you got to hold on and maybe raise some more money in the private sector. So or go through a trade sale as well. So I think exits are always great and good validation for the sector. But there's there's lots of reasons to be positive. On paper, there's those unicorns there. And like the rest of tech in general, they just can't go public right now. So got to wait for market conditions to correct.
Louisa?
But you say those unicorns are there, but we've had a few that were unicorns that listed by SPAC, and they're now trading significantly below their initial price. So I think what's a unicorn in the private markets in our industry at the moment is very much sort of questionable and in doubt. And I think that, going on the public markets at the moment, it's really difficult for these companies. There is no comparables. It's very few for these public market investors to value them on. So I think it was an excellent panel. I don't know if everyone saw it earlier on exits. And they all voted that they thought M&A was going to be the next sort of series of exits.
Right, but then there was a period where we believed that a SPAC could be a nice way to get to the public markets. Matteo, are SPACs dead?
I think they are. I don't know one SPAC that performed well in the ag space to date. But just on the exit, I think there's three things that I would think through. One is, the VC model and the kind of Agtech model are a little bit of crossroads. I think they do work, but I think the timing is a very different one. Innovation cycle in ag is once a season, and in tech is like 10 times a month or day. So I think that's just something that people need to get comfortable with, investors. And I think, we all feel it because we all didn't have the big exits maybe, or I don't know, everyone's portfolio here. So I think that's a problem. I think the other one is, and I think it also goes back to, I watched the panel as well, like who is actually the exit partner, right? And I think often companies don't really have a clear vision also who is actually going to buy my company. Is it a bank, insurance company? Is it really ag tech companies? And is it only the big ones? And I think they're the third one, which is for me the ones that I'm struggling with lately in the last couple of years is, don't price yourself out of it, right? I think a lot of I don't see a ag company, a big one, buying another company for 500 million if you don't move the needle on the revenue side, right? These have, you can't have. I think my figure is a little bit 300, right? If you go above 300, it's going to be difficult for other companies. And this is like a arbitrary number, right? It depends on the sector, it depends on a lot of things. But just saying, if you have your B round already at 500 million, who's going to buy you if you prove revenue?
Especially if we all believe that M&A is the way to go,
Exactly.
not an IPO. By the way, Louisa, any insights on the data for 2022, exit-wise and IPO-wise?
No.
Okay, Ofer, you wanted to say something?
Yeah, I also think that we'll see exit. By the way, we do work at Shibolet on few exits in not huge numbers, but hundreds of millions of dollars that hopefully will crystallize. I do think that we need to broaden the acquiring side, because what we see all the time is those big companies of the farming machine and etc., which have their own difficulties in assessing the technology sometimes, at least when you look at it from the startup side. And once the private equity, which I think will enter into that, which will take a bit more time, I think we'll see exit in the next few years.
Thank you. We're going to the last subject. No, we're going to the last subject now. He thought we're done already. Which is about, it's about Israel. So the statement is as follows. Israel will remain one of the key markets for AgTech, and investments will continue to flourish in the Holy Land. Yes.
Can't say any other answer than Israel.
So everyone seems to agree. Louisa, sorry again, I'm starting with you. And any flavor on the numbers in 2022 about what's happening in Israel?
In Israel, I had a quick look, and again, you can't hold me to it because we've not finished curating it. I think it's going to be about flat, probably. I'm trying to think of Agtech as opposed to Agri-Food Tech. We cover all of it. I think it'd be about flat, maybe a little bit down.
Which is good in comparison to the rest of the world.
Yeah, absolutely.
Danny, you said that I think your second time in Israel?
Second time. I was
Second
here in
time.
June for the first time.
So what specifically are you looking for in Israel? What are you looking for when you meet with the startups here?
Of course, we're looking for startups. We're looking for interesting technologies, particularly related to climate, obviously, but also ecosystem partners here as well. I think Israel has a fantastic ecosystem. You see it here today. So meeting with corporates, other accelerators, incubators in the ecosystem is fantastic to understand what's going on here. And I think you really got to know the ecosystem here to find the best companies as well. I think.
Bill, what do you think are the advantages of the local climate here?
The Israeli Innovation Authority. The fact that there's a new agritech accelerator being formed near the border with Gaza, where a startup company can go through acceleration with $2 million of initial funding, of which 75% of it is concessional and a loan that's forgivable. That is something that doesn't happen anywhere else.
Thank you. And then, Matteo, I'm coming with a more difficult question to you. What are the challenges here? What don't you like?
Look, I look at it from perspective from a kind of growth investor, and I feel like the ecosystem is incredible. I've said it, I think, to everyone I met the last 2 days, also on the food tech side. But it's it's very deep tech. It's very early, which is great if you do seed investments. I think someone like me who's looking for, and there's also a call out to any company out there who is kind of on the growth stage. I think that's something, I feel like there's a lot happening on the very early stage and then on the kind of early venture stage. And I think, they're getting in investors or foreign investors early is a big help for investors, for us, like coming in later, to really get comfortable or also around that whole, if you're just funded by the ecosystem in Israel, I think it will be difficult for someone like me to say like a 25 million, let's go. If I don't know a little bit, the progression of the startup, who are the investors, etc. Because it is a very close ecosystem, which is great in many ways, but also I think we need to facilitate other investors and foreign investors coming into the Israeli ecosystem in that way.
For someone who works with so many Israeli startups, how can Israeli startups do a better job presenting themselves to the global investors?
Correct. So I think, first of all, just to echo on, the IIA is doing a great job, but as part of the lack of maturity in this sector yet with respect to exit and growth investment, I think that acquirer and investors, sometimes that's their first investment here in Israel. You see a lot of that, and they are finding hard to cope with the involvement of the Israeli government, at least in certain markets. I would think that the founders and the entrepreneurs should try to overgap the still cultural gap that I see, that it's a young industry, and you see not very experienced entrepreneurs. They're doing all the mistakes in presenting, in being transparent with a foreign investor at the first time, and I see a lot of transactions that we find it difficult to close due to lack of transparency.
They're signaling we have to finish, so any last thoughts, predictions for 2023, wise words about anything I didn't ask? Matteo?
Look, I think I hope there's going to be consolidation in the market, because that will just give everyone the breadth and also the kind of the revenue side or the scale to really make it. I hope less companies are going to go down, more consolidation happening, and I think I think food tech and AgTech is so nice because there's so much overlap that they can help each other as well. So I think it's important to do that.
Bill, last words for you.
Expect the Fed to raise rates 150 basis points, which is going to bring valuations in the sector down further.
So I think, honestly, I'm more optimistic than when I started. What I've heard is that the world is a horrible place, but within that horrible place, AgTech is going to generate more money. We're not too concerned about the exits. They will come, mostly M&A. Consolidation, Matteo, is going to be a solution to build bigger and better companies. We all believe that Israel will continue to be a thriving place for AgTech. And 2023 can only be better than this year. So I think with these words, thank you all. Thanks, Matteo. Thanks, Louisa. Thanks,
Thank you.
Danny. Thanks, Ofer. Thanks, Bill. And thanks to the audience.
Thanks for being a
Thank
great
you.
moderator.
Thank you.
everyone.